Small investors get a third of Shell IPO. Philippines Shell Petroleum Corporation is opening today the small investor portion of its P19.5 billion initial public offering. Philippines Shell, which launched the country's second biggest IPO this year after Cemex Holdings Philippines Incorporated's P25 billion offer, is selling 27.5 million shares to local small investors and 55 million shares through Philippine Stock Exchange trading participants at P67 per share. The offer period will run through October 25. Advertisement. The retail offer accounted for about a third of the total deal size, which was mainly allocated to high-quality long-term local and international investors, Reginaldo Carriazo, Managing Director of Domestic Underwriter BPI Capital, said Tuesday. The company, which would have a public float of about 17.3%, makes its trading debut on November 3 under the trading symbol SHLPH. Its post-IPO market value was seen at P112.6 billion, larger than Petron's P98.4 billion, as of Tuesday's close. The underlying performance has been very good. If you look at the macro performance of the Philippines, GDP has been growing, Edgar Qua, outgoing Philippines Shell chair and president, said during a press briefing. He will be replaced by Cesar Romero. The company said 10% of the IPO was in the form of new shares, all the rest were secondary shares being sold by Shell Overseas Investments BV, the Insular Life Assurance Company Limited, and Spathadia Campanulatu Incorporated. There was also an over-allotment option of 16 million shares. Net proceeds from the offer would be used mainly for the company's capital spending, including its retail network expansion to 1,200 stations by 2020. As of June this year, it had 966 Shell Group branded stations, 60% are in Luzon. Currently, 81% of the total main fuels sold by Philippines Shell was supplied by its Tabanao refinery in Batangas. Tabanao is one of only 2 refineries in the Philippines and has a nameplate capacity of 110,000 barrels per day. The company's IPO was aimed at complying with the oil deregulation law in 1998, which required oil refiners to list at least 10% of their shares in the local market. Qua said the long delay was due to uncertainties over investment decisions, mainly on whether the Shell Group wanted to continue refining operations in the Philippines. It was only in 2015 when we got the support of the shareholders, Qua said.